Singapore's economy is set to shrink by around 2% this quarter compared to the previous one because of the tightened pandemic measures that started in May. Before that happened, economists were looking forward to positive growth. Still, they say that better than expected first quarter will mean the economy ending the year strong. Brennan Tanoto with more.
More staying at home means logistics provider Lalamove has been busier than usual. And even after tighter pandemic restrictions are lifted, it's expecting tails to keep ringing. In fact, it's even ramped up hiring to meet demand.
We saw around a 60 to 65% increase in orders. With the work from home basis, there will be an increase in demand. And definitely there's a lot of businesses that start to adopt technologies such as being integrated with certain platforms on e-commerce side.
Economists say these are signs that consumers are still spending during the month-long heightened alert period. At the same time, harder-hit segments like F&B and retail contribute only slightly over 2% to the country's GDP.
The impact is quite marginal. All right, it affects mainly the F&B and to some extent retail, and to even lesser extent the real estate services sectors. So in totality, the full impact on the economy is not as great because by and large, we are still getting some support coming from the other clusters like manufacturing, financial services, infocom services, for example.
These growing firms will be able to hire more people, and that in turn means even more spending.
Now, looking ahead, experts say the biggest downside risk for an open and trade-reliant economy like Singapore is the resurgence of cases both domestically and abroad. Now, that's because it will not only impact external demand and delay the reopening of borders, but it will also lead to tighter measures to curb the spread of the virus.
Do not discount the possibility that we could actually have a technical recession. Like, for example, if we have another flare-up, another wave of infections in the community in the third quarter, and the government have to come in with another round of P2HA, then and perhaps even with more stringent measures, then potentially you could actually have two consecutive quarters of sequential decline.
For now, Singapore expects full-year growth to be between 4 and 6%. The forecast will be reviewed in August when more economic data at home and abroad becomes available.